Kevin Warsh, former Federal Reserve Governor, has been nominated as the next chairman, causing significant volatility in global asset markets. Our country's Korea Composite Stock Price Index immediately surpassed 5,000 but then dropped sharply. The prices of gold, silver, and even Bitcoin are plummeting, while the value of the dollar is rising. Today, let's take a closer look at this topic. Let's get right into it and calmly go over the current market trends. Right now, the price of Bitcoin has dropped to around $77,000 for the first time in 9 months. Bitcoin is down about 39% from its all-time high of $126,210 in October 2025. The drop is quite significant to be considered a short-term correction, and since there have been hardly any rebounds during the price decline, we can say that investor sentiment has already been greatly weakened. This mood was also seen in the gold market, viewed as a safe asset. International spot gold prices dropped about 9.5%, falling from $5,594 to $4,883. In the futures market, prices declined nearly 11% in one day. Gold typically attracts investment during financial turmoil, but this time saw an unusual surge in sell orders instead. Investors in this phase aren't differentiating between risky and safe assets. They're just pulling out liquidity. The silver market shock was even worse. Silver prices jumped over 150% in 2025, becoming a key speculative asset, but after Wash's nomination as former Fed director, they dropped nearly 30% in a single day. This is the biggest single-day drop in over 40 years. Silver's high industrial demand and volatility set it apart from gold. Its sharp decline likely reflects sudden policy fears, not just profit-taking. This shock was directly transmitted to the Korean stock market as well, and volatility increased to the point where a sell sidecar was triggered in the Korea Composite Stock Price Index market. A sell sidecar suspends program trading for 5 minutes if Korea Composite Stock Price Index 200 futures drop over 5% from the previous close and remain there for more than 1 minute. You can think of it as a kind of safety belt to prevent the market from spiraling into a panic. As soon as the Korea Composite Stock Price Index fell below the symbolic 5,000 mark, this system was immediately activated, which also means that selling pressure was instantly concentrated at that moment. This is the first time since November 5, 2025 that a sell sidecar has been triggered in the Korea Composite Stock Price Index market. As you can see, almost all major asset markets are in turmoil. There are several reasons for this chaos, but right now, the biggest one is considered to be a single factor. It's likely the nomination of former Fed Governor Warsh, as I mentioned. Let's find out who Warsh is. It was widely expected that Kevin Warsh, chairman of the White House National Economic Council, would become Fed chair. However, his close relationship with President Trump is now seen as a disadvantage. In contrast, former Fed Governor Warsh gained broad financial industry and think tank experience, earning strong Wall Street trust. He is the son-in-law of Ronald Lauder, heir to Estee Lauder. Ronald Lauder has also been friends with President Trump for 60 years. So, some say that his wife's family's background was also one of the factors in his nomination as chairman. Anyway, that's not the important point here. In fact, former Fed Director Warsh has often been classified as a hawkish figure, meaning he is known to prefer monetary tightening. He was well aware of the risks of lowering interest rates too quickly in the past, so he has been evaluated as a hawkish person. Former Fed Director Warsh has criticized the Fed for overstepping monetary policy boundaries during COVID-19 and the 2008 crisis. Former Fed Director Warsh long argued that the Fed's asset purchases enabled more government spending, distorted markets, and drove inflation, so he pushed for a smaller balance sheet. Recently, however, his stance has shifted. He has also been showing a more dovish side lately. Recently, by advocating for interest rate cuts and aligning with President Trump's stance, he has been displaying dovish tendencies. Former Fed Director Warsh has said interest rates could be lower and called for a rate cut. And he also argued that if the Fed restores trust in its ability to control inflation through tightening, inflation expectations will fall, and long-term rates like mortgage rates will naturally go down. He has shown a hawkish stance at times, but his recent dovish side has increased market uncertainty. Still, some in finance speculate that although former Fed Director Warsh is being dovish now, his hawkish tendencies will emerge later. For example, Stephen Brown, Deputy Chief North America Economist at Capital Economics, said in an investor note that his hawkish stance will ease worries he could become a Trump puppet. Ril Dutta, the chief economist at Renaissance Macro Research, also said that Warsh's dovish remarks were made for convenience, so it seems we need to keep watching to see what choice former Fed Director Warsh will make. There are so many opinions that it's unclear. Some expect interest rate cuts to follow President Trump's policy direction. Some argue that former Fed Director Warsh, known for his hawkish views, might oppose and resist President Trump. According to a Morgan Stanley report, they said there are signs of efforts to implement additional interest rate cuts before the midterm elections, and I think this is probably the direction things will go. Maintaining the Fed's independence is now a major challenge, as the main issue is how much it can resist President Trump's pressure to lower interest rates, since he views the Fed as an agency that should follow his directives. President Trump made interest rate cuts a condition for nominating the Fed chair, and former Fed Governor Warsh made statements that aligned with this intention. In fact, he was even nominated. The problem is that former Fed Governor Warsh is not actually a strong advocate for interest rate cuts. There may not be any issues with economic indicators supporting a rate cut, but if inflation rises significantly, he will have no choice but to reconsider his options. It's unclear if he could resist President Trump's pressure to keep interest rates steady. If he doesn't cut rates like Chairman Powell, he may also face public criticism from Trump. If ex-Fed Governor Warsh made a politically driven rate cut, many investors might sell United States assets. If we look a little deeper into this situation, the key issue isn't whether to raise or lower interest rates, but rather that trust in United States monetary policy itself is being shaken. The Federal Reserve has been able to serve as the backbone of the global financial system because it has always operated on the premise of keeping its distance from politics and focusing solely on the goals of price stability and employment. Investors trust United States assets, believing the Federal Reserve bases decisions on economic data and long-term stability, not politics. But if, like this time, the nomination of the Federal Reserve Chair starts to be strongly interpreted as being linked to the president's demand for interest rate cuts, this very premise will be shaken. If people believe the Federal Reserve is politically influenced, trust will be impacted before interest rates. United States Treasury bonds are seen as the world's safest assets, the dollar is the global reserve currency, and the United States stock market benefits from this trust. These three assets move together as a bundle. Investors have bought treasury bonds, held dollars, and invested in United States stocks, assuming the Federal Reserve remains independent. If this structure is shaken, the trust and premium attached to all United States assets will inevitably be reassessed at the same time. Especially from the perspective of global capital, the most frightening scenario is a situation where policy direction becomes unpredictable. If today, political pressure leads to lower interest rates, and tomorrow, as inflation suddenly surges, there is a hasty return to tightening, and this pattern repeats, the damage will always accumulate in the financial markets. In this kind of environment, investors find it difficult to make short-term plans, and as uncertainty grows, they tend to move toward reducing their risk exposure. Government bond yields become unstable, the dollar appears volatile rather than a safe haven, and the stock market faces major pressure. As a result, the market is watching both Federal Reserve Governor Warsh's actions and how much political pressure the Fed can handle. Is the Fed's independence at risk? A single signal can be fatal. If that signal repeats, investors may rethink their trust in United States assets, potentially causing structural shifts in global capital flows. That's why the issue of the Fed chair nomination is not something that will end with just a day or two of market fluctuations, but is being taken much more seriously as it raises questions about the very foundation of the United States financial system. Additionally, this issue isn't just in the United States. If trust in the Fed falters, emerging markets will likely feel the effects first. Countries dependent on liquidity will face exchange rate swings and capital outflows, leading to global financial instability. The market is already doubting if the Fed can still be the benchmark for global finance, even before Governor Warsh's first policy decision. Currently, the nomination of Governor Warsh's to the Fed is causing significant turmoil in the asset markets. I'm also in a tough spot right now. What do you all think about the nomination of Governor Warsh's to the Fed? Share your thoughts in the comments. Thanks for watching.